Hi everyone, Piers Bolger is my name. I'm the Chief Investment Officer at Viridian Financial Group. We've been working very closely with the Carrington team since they decided to leave Securitor and set up under their own licence. Principally, our focus has been on the investment side of things, working with Brian, Jason and the team in order to establish an investment framework that provides the ongoing support that they need from a business point of view, but more importantly, clearly, how they feed that back into the advice that they give to you guys as their clients. And we thought it'd be worthwhile just sort of touching base on a couple of points that where we've been working together, how we've been establishing the underlying strategies to support the team at Carrington's, but also just provide you with some of our thoughts on financial markets as they stand today. And the best way that I thought to maybe illustrate that is just to show you a couple of slides in the context of our balanced investment strategy and how we manage that strategy and how the advice side of it then ties into that as it relates to obviously your individual needs. And just to give you a starting point in the context of that, when we think about investments and investing in financial markets, we always look at it from the context of how can we best manage risk. Our core view is that if we can manage risk well, if we can understand the type of risk that we're putting into investment portfolios, then through time, the eighth wonder of the world being compound interest, allows that strategy to evolve, to grow, and ultimately to deliver the outcomes that all investors are hoping to achieve. Part of that investment strategy focuses on two elements, the way that we think about it. First and foremost, it's having the right asset allocation or the right underlying investment structure to support that those objectives. And the second one is then what are the building blocks that we use in order to deliver on that investment strategy, and how do we then articulate that through an individual portfolio. And I just want to highlight these 2 points. And the first slide you can see here is a reflection of our balanced portfolio. A number of you would have your investments in this particular portfolio. And probably two important things to note when we look at this portfolio here on the slide. The first and foremost is that the strategy has been running now for a number of years, and we've been running the strategy even prior to obviously Brian and the team setting up under their own license. So that's one aspect. So there's duration in the context of the way that we've been managing that strategy and delivering on that strategy over time. But probably more importantly, in the way that we would look at it, when we look at the asset allocation, which forms the basis by which we deliver into that strategy, there's two aspects to that. The first and most important element is that we've got diversity through the portfolio. So again, going back to that original comment, we like to manage risk. We believe if you manage risk better or as well as you can, then ultimately the outcomes will look after themselves. And that's one aspect, by the way, that we look to engage with Brian and the team at Carrington's, is to think about how do we want to deliver the types of outcomes for you as clients, and then ultimately how does that then get reflected across our portfolios. So the aspect there about having a broad asset allocation framework we think is really important because ultimately it enables us to be able to do two things. One is to better manage individual risks in certain market environments, and we're clearly going through that at the moment. And then secondly, it allows us to be able to provide multiple building blocks to form part of that portfolio. So again, if you're looking at that chart there, you can see quite a number of individual asset classes in order to be able to deliver into the overall portfolio framework. And we think that's really important in terms of managing risk, and also more importantly, equally around that, to deliver investment return through time. The second chart provides you with a snapshot in the context of, just the way that we look to tilt portfolios through time, depending on different market conditions, as well as obviously the different type of investment opportunities that may be presenting themselves. And again, this is really important in the context of the engagement that you've been having with Brian, Jason and Nella over the last couple of years. As I said, we've been working together since in terms of setting up the strategies for the clients of Carrington. So just chart here just shows you how we've been managing that asset allocation over the last, certainly again since inception, but think about it over the last couple of years. And you can see there that the ability for us to be able to utilise the asset allocation framework in order to add additional value to portfolios we think is really important. And just to see on that right-hand side, just the table there on the right-hand side, just some statistics around that when you look at the portfolio, it's been able to deliver a good solid return, north of 15%, close to 18% since inception. But more importantly, going back to the first point, we've been able to deliver that delivering on roughly around about 2/3 of the time positive absolute return on a month-to-month basis, which again goes back to our focus around having a broad asset allocation framework, being able to use multiple building blocks in order to, as I said, deliver that consistent investment return through time. The other point to note on this chart is the ability for us, as I said, when we do deliver those positive months, it's not necessarily skewed to any one particular month or any one particular asset class. Again, the ability to spread risk is really important. And you can see from this portfolio, if you're looking at the risk of this portfolio, just measured by the daily volatility of the portfolio, you can see this portfolio is carrying a lot less risk relative to, say, the Australian equity market as an example. Now, clearly there are different risks associated with just investing in equities, but it does highlight when you do have a broad-based portfolio, a diversified portfolio, you can start, as I said, to reduce the overall level of risk at a portfolio level, and that can provide a more balanced and more consistent return profile through time. And that's one of the key attributes that we've worked very closely with the team in terms of delivering. The other important point to note around the portfolio and the structures that we look to put in place is that when we try and deliver those performance returns through the portfolios, we're not trying to hit a home run on a month-to-month basis. But what we are trying to do is ensure that our upsides are always greater than our downsides. And clearly we're going to have months where we underperform, as you can see there, roughly around about 1/3 of the time through the cycle. But pointing to that, we roughly outperform by just under 0.5% each time relative to the months where we underperform in absolute sense. So it does provide, as I said, that ongoing consistency coming through the portfolio in terms of its performance. If you ultimately just keep clipping the ticket and outperforming on a consistent basis, that will start to flow through in terms of the overall performance in time. So this is the way that we've been, as I said, working with Brian, Jason and Ella in the context of Carrington's, how I've been, as I said, structuring the portfolios, looking for investment opportunities. Those opportunities might also come in the way that we look to restructure the individual portfolios in terms of external third-party fund managers, for example, where we're using those as one of those building blocks in the context of our investment portfolio. So very much an ongoing dialogue. We speak regularly. I think it's really important in the context of that. And we have a really good active conversation in regards to how we want to deliver the investment solutions that ultimately the team have in discussion with you as clients of the Carrington's business. Finally, I thought it'd be worthwhile just sort of touching base a little bit on how we see financial markets at the moment. It's been a very, very challenging time. We've all been in lockdown for an extended period. In our view, that's likely to continue at least for another probably 4 to 6 weeks before we start to see potentially the loosening of that lockdown in some industries and some parts of the Australian economy start to reopen. But, in our view, it will be very much a staged approach. It won't be going back to where we were, let's say, at Christmas of 2019. But on a positive side of things, Australia and New Zealand particularly, have done exceptionally well in terms of flattening the curve. New cases are only, moderate at best, certainly well under what we're seeing in other global jurisdictions. And that's really important in the way that we can then handle, as I said, the ability for the economy to reopen and ultimately for life to head back to normal, whatever that looks like post this. I think it will be very much a different landscape out of this when we compared to, as I said, prior to going into the lockdown. But the economic environment is constrained. There's no doubt about it. We expect economic activity to remain weak, certainly over the next 3 to 6 months, and we expect some sectors not to really start to recover until 2021. And again, from an investment strategy, it really then, from our point of view, we need to be focusing on not only managing to what we're seeing now in the economic and financial market environment, but also having one eye to the future. And again, in terms of setting that strategy, that's again a really important component part of the way that we think about investing and the type of dialogue that we absolutely have with Brian and the team in regards to the overall strategy and delivering on that strategy for you as clients. But we do see some positive signs. We do see some positive signs not only domestically and globally. Part of that's been filtered into the performance of financial markets in the certainly through April month to date. It will be a very much a sawtooth type recovery in our view, and probably an elongated type of recovery. But as I said, we do expect, as I said, for everyone to get through this, and ultimately that will be reflected not only in economic activity, but equally financial market performance. As always, Brian, Jason and Nella would love to hear from you. As I said, we're working very closely with the team there. Hopefully you start to sort of see some of the work that we've been doing in the back end reflected in your portfolios. As I said, I speak to Brian at least once or twice a week. I know the team's working very hard to repositioning portfolios accordingly. But as I said, they'd love to hear from you if there's any concerns or any thoughts that you have in regards to your own individual circumstances. We'll look to deliver these updates on a pretty regular basis, ultimately, as I said, as the team feels fit. But stay safe and look forward in touching base again soon. Bye for now.